Hi guys, welcome back to another video. In this video, we'll talk about the weekly outlook for the June monthly expiry. First, we'll start with the Nifty structure. Then I want to show you some price distortion examples. We'll talk about that and then we'll round up with a review of what happened last week. Right now, if you look at the structure in Nifty, it has not changed much. A frustrating month for many of the traders. Here, the structure has shifted. Like I told you at this point, we were looking for a triangle pattern. Let me draw it. It'll be easier for you. Over here, right? From the last discussion we had, I showed you this triangle pattern. This is one of the setup. If market wanted to go bearish, this wave 5 failure here because of a news or whatever it may be, and then market drops, goes for a pullback on top, and then we'll see the next leg fall. Okay, this was one of the setups we had, but right now, what is the development from there? Nothing much. Price is still stuck in the range. What was the second option we had? What is the second option we had? Was an irregular flat pattern. An irregular flat pattern. Here, in this case, what happens? Market goes like this, falls down, and then we start a new leg on top as wave 5. Some wave 5. All right. These are the two bullish and bearish possibilities we had. So what is the situation happening right now? We don't know because price is still in this zone. So how do we plan for the next week? I'll talk about it. For next week, we'll look at only this part. We'll look at only this part and then we'll decide the larger time frame because our entire focus is going to be only for the monthly expiry. Right now, let me zoom in. Let me go down to a smaller time frame. At this point here, from this rally, what do you see? That this is some kind of impulsive move. And yes, this is a three-way pattern. Very important. Whatever started from here is a clear-cut three-way pattern because here also there's a three-way pattern. All right. So there's an entire three-way pattern which formed here, another three-way pattern, and then we're going up. So you can call this as an ABC, WXY, whatever you want, but this is a three-way pattern. Right now, every time there is a rally in the market or any sharp move, I've told you this very, very important point all the time. Now, Fibonacci retracements are very important. If you look at this, I just draw this Fibonacci retracement and I keep it here. All right. So keep this in mind. This concept I've shared it so many times. I'll repeat it again for all the new ones, all the people who have just followed me. 38 to 50% zone. So what do you need? First thing, you need a sharp move in the market. All right, sharp move first. Then after a sharp move, whether it's a down move, I'll draw the down move on the side. What do you need is a pullback in the market. Now this pullback, you want to find out whether it is just a buy on dip scenario. In case of a bearish move, you want to see if this is a sell on rise scenario. So this 38 to 50% zone will tell you what to do. All right. In case this zone breaks down, it means this previous wave is finished. Market is planning for a reversal. As long as this zone is intact, this provides us a low risk opportunity for buy on dip scenario. Same thing here for a bearish scenario. As long as 38 to 50% zone is intact, it is a sell on rise. First condition is you need a fast move. In Elliot wave terms, we call this a wave 3 type pattern. We want to see a fast move, right? So all this is already covered in the Elliot wave master course. Those who have studied it, you already know about this. Now, same thing applies here. We have a previous high. Let me just connect the dots using a higher time frame now. If market next week, Monday, starts a correction, and then this level is not broken, 30 to 50% zone, we can see an up move till the expiry. Simple as that. There's nothing complicated. What if market does this? Market does this, Monday up, Monday down, Tuesday up, and suddenly starts to fall. What to do in that case? In that case, again, just adjust your Fibonacci zone like this and mark 38 to 50%. Mark 38 to 50%. Now, I'll just give you an example of this. Very simple. You see this rally here in the market. It started from this point. We had the same idea from here. This is the recent fast move because this was a breakout from here, triangle breakout or whatever that time we were calculating. What did we do? If there was going to be a reversal, it has to break your 38 to 50% zone. So in this case, it was over here. A single short market broke it. Again, this is not your expiry day volatility. This is a big red candle. Again, based on, it is on the expiry day, but this volatility was not only because of expiry, it was because of some other global factors. It broke down very sharply. So as soon as it breaks, as soon as this 50% zone, 38-50% zone is broken, you understand that this is completed. Market is going for a reversal. Now, question is, same thing happened here also. Correct? Same thing happened here also. If you look at this, where is 38 to 50% zone? Yeah. Why did I not use this candle low here? Because the actual low is around, there was a gap between the open and the first candle price. If you use the extended trading hours pre-market open, you'll understand. What did the price do here? It came back, sustained this zone. Right now it sustained this zone and then it's going up higher. Simple cases. This is a continuation pattern. All right. This is a continuation pattern. Earlier we discussed a reversal pattern. So right now, what is the plan here? Simple. If market continues to break down without crossing this previous high, if market continues to break down, then we are expecting not for the entire move. I don't think the entire move will come in the full next week. If there's a bearish case here, I don't think we'll have a very blasting bearish move at the moment, unless there is some global news event which happens. We will definitely come back and retest this point. Let's keep this as a first target. And then we'll have this swing low as the next one. All right. So bearish side, first this swing low and then here. That is a primary conservative target. It's very important that you don't plan every week for 500,000 points, but just keep a small target of 300, then 500. Measure slowly. Observe how market is falling. If it's going slow or fast, all that counts. So right now on the bearish side, we have an opportunity in case market does not cross this high. If this 38 to 50% zone at this point here, if 38 to 50% zone is intact, if this zone is intact, what do? We can look for an upside momentum. I'll be looking for at least 25,300 level minimum. I'll be looking for that. And then we'll see what happens from there. Because this, if this is a 3-wave pattern and we are in a wave 5, then it can be also a ending diagonal. All right, we'll be an ending diagonal. There are some cases, I'll show you on the higher time frame. Let me go to a daily chart. There are some cases that this ending diagonal started from here. There are some cases that ending diagonal started from here, like this. And then this is the final move. There are some cases, but right now at the moment, I'm not going into that. It can also be possible that this ending diagonal started from here like this as your wave A, B. Ending diagonal can be two types, expanding and contracting. If this is expanding, it comes on the lens. All right, we'll talk about that later. But right now, especially for next week, we have the idea of what to do here. In case of a bearish scenario, in case of a bullish scenario, how do we look at? And the main important game will be on Monday. Monday will tell us what exactly happening in the market. All right. Now, price distortions. In my own experience, in my own research, what I've done is I have tried to build a system, very effective system, to find almost reversal structures in the market. Here, if you see that there was a reversal in the market, yes, very good. From this downtrend, market goes up very fast. All right. Similarly, there was a pattern here from where the market, from a bullish scenario, overall bullish structure, it starts to give us a sharp turn. Here, if you look at the structure, this is a 3-wave pattern. This is a 3-wave pattern. Now, this 3-wave pattern cannot come in the last wave. I'll repeat that again. If we have your wave 1, wave 2, wave 3, wave 4, wave 5, change the color. Right. So in this case, when we have 1, 2, 3, 4, and 5 pattern, in this case, in your wave 5, this is the last leg of the move, right? After this, only reversal comes. Here, you cannot have a 3-wave pattern in wave 5. You can have a diagonal pattern, sure, like this. This can be an expanding diagonal. You can have a contracting diagonal like a wedge. Right? This is a wedge type pattern. And also you can have a dump, pump, V-shaped move. No issues with that. Impulses by default, impulsive pattern by default. All these patterns, there are major 3 patterns. What cannot happen is this. This is not allowed. This is not in textbooks. This is, again, this is not happening because of, let's say, some news event. This is happening because somebody is wantedly doing it. Now, same thing over here. In case of a bullish scenario, wave 1, wave 2, wave 3, wave 4, and wave 5, what happens here is same thing. A wave 5 cannot end with a 3-wave pattern. Wave 5 cannot end with a 3-wave pattern. This cannot happen. This is not allowed. So question is, why is it happening? I'll tell you why. Because I've seen this in US markets a lot. This happens near some important news event, or some contract shift happens, or some CPI data or Fed announcement. Something like this always happens. This is due to algos, high frequency trading algos. They don't care about what pattern is happening. This is not human which is doing it. Humans make this pattern. Humans make the proper regular patterns. This human psychology. When there's no human involved here, I mean, obviously retail traders are there, but the big boys, when there's pure algo movement. This happened in Bank Nifty in 2023 when I first started seeing this in Indian market. Luckily, I had some experience with the US charts, so I could easily spot it. Back then, with my private members, back then I told to stop looking at Bank Nifty. So Bank Nifty around, I think, mid of 2023, I told them to stop looking at Bank Nifty. There's something fishy going on, some distortions in price. This is distortion in price. All right. This later, we had announcements of, big news, breaking news of Jane Street, the high frequency trading algos, which is making billions from the Indian market. Billions means nearly 1,000 plus crores. So in 2024, it was, I think, I don't know the figure exactly, approximately 2,000 crores they earned. In 2023, they earned approximately 1,000 crores. So there was a frenzy, madness in Bank Nifty back then. All retail traders, everyone, every influencer on YouTube, Bank Nifty, Bank Nifty, Bank Nifty, weekly expiry, daily expiry. There was some expiries which was happening all the time. So that frenzy created Jane Street's biggest profits in their lifetime in Indian markets. Right now, if that is gone, if weekly expiries are gone after 2024, why is this still happening? Is the question. This is happening because now there are multiple high frequency trading HFTs, high frequency traders, companies like JP Morgan, Citadel, all of them have come to India now because they've seen this opportunity. This price distortion is going to happen further and further. So wave 5, if you look at GIFT Nifty's chart, you can see that there's a easy diagonal pattern. You can say that yes, this is a diagonal pattern, but that's in GIFT Nifty. But in Nifty spot chart, there's something else. So spot chart is not behaving as per rules of natural frequencies. It is being manipulated. Very easy for me to tell. Question here is now, what do we do? What do we do as retailers? I have a strategy. I have methods to counter this. It's worked in the US markets. Small glimpse of that is there in the breakfast indicator. So breakfast indicator for global markets is there. There you can see price macros and how we deal with it. It works in Indian market also, but then we need some more time, meaning extended trading hours is required. More time, 9:30 to 3 o'clock is not enough for us. We have to extend it from morning 6 o'clock to your evening. So at least some futures like Nifty futures or Gift Nifty futures, something we should be allowed to trade in extended hours. Then we'll have a proper safe setup. We can survive these algos, these kind of distortions. It will not disturb us. Right now, I'm waiting for that day to come where we can trade extended hours. So all these distortions won't disturb us. Right now, Indian market is in a transition phase. For me, it's very easy to tell because I've seen what US market does. Same patterns are happening in Indian markets also. So last week, what happened? We had some stocks. I shared some stocks in the Telegram group. Again, one key important point I've told is that I'll just give the time. I'll give some stock pick. Here you have to study your own market structure. I'm not going to spoon feed. There will be no spoon feeding in my group. I gave you the time here for Cipla 9:15 to 9:45. Again, another day. We had a decent reaction here. Catching this move is actually difficult. You need some high skill to understand this structure. This is not a random structure. This is a little bit distorted also. But again, you need some skill to catch this kind of move. But the easier one was in Balrampur Chini, right here. Balrampur Chini, we had a perfect fall here from this time zone. Same thing, I gave you a time zone. Beautiful fall, collapse, and then small pullback right now. Balrampur Chini, if anyone told me that there was an FNO ban, I would have looked at any other chart. But again, it was in the FNO ban list. So that's why I could not find a setup for trading. Obviously, it worked very well as per charts. And we had Eicher Motor. Eicher Motor was, I think, the star. This was shared a bit earlier on Friday of the previous week, Friday afternoon, evening, whatever. And then we had the first 9:15 to 9:45. And then in a week, we had a blasting move in Eicher Motor, right? So all this I'm sharing in the Telegram group for practice and study. I've told you before, I will not tell buy or sell. I don't give buy or sell signals. It's up to you. If you're practicing, if you're studying the Elliot Master course, you're studying advanced concepts, it will be easier for you to understand all this. All right. So for next week, plan is ready. I explained what distortions are happening in the market. That we are in a transition phase. Expect something like this also next week. Question in everyone's mind is whether we'll have a breakout or breakdown. This question you must understand is that think in terms of the big guys. Every month after the mid-month, right? That is your 15th. They plan for your weekly expiry. Sorry, monthly expiry. Suppose 15th is somewhere here. They plan this is the start of the month. This is end of the month. So here they plan for the monthly expiry options. In that case, what happens is there is definitely volatility at this point or from this point onwards. Here, if it's dull, this point, then later volatility will come. All right. So right now what has happened is it is almost shown us that middle of the month is given some volatility already. It has given the opposite direction. Why do they plan? Why do they plan from here onwards? Because this is where the real decay starts. Monthly options after first 2 weeks, not much. Okay. First 2 weeks, not much. Third and fourth week is where the real decay starts in the monthly option. So this is where they are active. They make their positions accordingly. So in this case, if you tell me that yes, monthly breakout can come, the entire month of June was again sideways. If the breakout comes here, it can be a fake out also. If they've made a position here, if they've made the positions here, they will not let it expire below this. They will not let monthly expiry below this. They can either bring it back down near around level 25,000. They can do that. They can give a false breakout here, hit all the stop losses and bring it back again down. It's very simple. This is a simple concept. Or else they will just crash it here. This is simple areas of stop loss where retail thinks. Simple areas. So it's not necessary that all the big players are fighting against retailers. They can fight amongst themselves. I've shown this a small example in a video earlier regarding expiry, violent expiry and quiet expiries. the expiry war, right? You can understand that. Again, violent expiry was the last week. This was a decent expiry, nearly 180, 150 points range. Decent expiry, not much. 300 plus points move is a violent expiry. So we'll see what happens next week if it comes here. Expiry volatility happens. I told you again, there was a probability of 60 to 70% that we will see some manipulation during expiry. Thinking about option buyers are having a very tough time because they're almost missing every move. You understand what I'm saying? Option buyers are having a tough time because they're missing every move. Move is coming very fast, like this. It's coming very fast, sideways. Or else market is going down in gaps and immediately reversing. So which direction should you play? That is difficult for many option buyers at the moment. And overall, they've been stuck in a small range. Overall, VIX is falling down. They've been stuck in a small range. So option buyers are having a very hard time unless you have a mechanical setup. For example, breakfast indicator. Unless you have a mechanical setup, this range is killing all the option buyers. All right, guys. So next week, yes, it is possible we can have a breakout, but keep in mind, false breakouts are also possible. It's a monthly expiry. It's not just Nifty's contract. All other contracts are also expiring. I'll see you in the next video. Till then, take care and be safe.